Per usual, living on this channel is for educational purposes only and is not intended as financial advice. It is Setup Sunday, and a fair warning to the bears, this is going to be quite the bullish video. Let's take a look at the ETF flows. The singular reason why we are slingshotting as quickly as we are is because of flows, because of money coming in. We are only as large, we can only support prices where they are if money comes in. And it's undeniable that the ETFs have been a massive success so far. It's hard to tell by this graph. Last week's volume inflows net was 1.7 billion. Yes, we had GBTC outflows thanks to the Genesis and Gemini Earn settlement, which should be finalized by next week. I don't think we will see similar flows next week for GBTC. And as some people have already noticed, price was flat with GBTC outflows what they were. So those appear to have been absorbed. And I know it might be hard to think like we're at all-time highs. It can't be more bullish. It just can't be. It has to pull back, or you're on the sidelines or whatever. Eventually we will get a move down. It always happens. The question to ask yourself is, am I playing this smartly? Am I taking appropriate risk? You know, the people trading the meme coins with $50, they're going to make a lot of money. Great. Okay. But the rest of us who have much more money on the line, we have different things to think about, right? So when we have flows that are, in my opinion, sustained, and what's the average level here? 250 million a day, 350 million a day. The longer this goes on, the more bullish this gets. The more bullish this gets, the higher price goes. The higher price goes, the more people want in. Nobody owns this stuff. Virtually no one has onboarded yet. So until everybody owns this, it's going to be a different story. But right now it's all about flows, and there are people who are still ignoring flows or just flat out don't understand. We can look at the ByteTree data. 30-day flows have never been higher. Never been higher. This is global. This is everybody. This is any data that matters back to 2016. The last time flows were remotely this close were 2020 post-halving, basically. So if you're looking for a reason as to why price is where it is, this is the reason, right? That's one of the reasons why I've been following the flows as closely as I have. From Nate here on the ETF side, I mean, it's just, you can't ignore it. Nobody can ignore it. Any podcasts, TradFi or otherwise that I'm listening to, they're all talking about Bitcoin, okay? So take that as a sign, but everybody's thinking about this, talking about this. Retail is starting to wake up a little bit. We've got the Coinbase app moving up the App Store, but the TradFi conversations I'm hearing are very much bearish, are very much negative. Do not understand what's going on here at all. Do not understand most things regarding Bitcoin. Do not understand why anybody would buy this. And that's fine, but people are buying it. We provably have that data. And look at gold versus ETF, or gold versus Bitcoin. This is gold ETF outflows. I'm so excited I can't even speak straight. Gold ETF outflows versus Bitcoin. I mean, could you imagine? What are you doing sitting in gold still? What are you doing? Anyway, gold, Bitcoin is almost at an all-time high. Gold SPX is almost at an all-time high. Gold, any fiat currency in the world is almost at an all-time high. And people are still very much in denial. Still very much not understanding that this could go higher. And don't really get what's going on. That's all it comes down to. This isn't like, you know, the bulls think they're a genius. This is just the data shows money's coming in, prices going up. It's that simple. Quarterly returns look great for Q1, unusually bullish. We'll see if this spills into Q2. We'll see if this spills into the rest of March, which is really, you know, what matters. ETH, by the way, tends to do better the first half of the year. Very rarely has had a red Q1 and Q2 since 2016. For Bitcoin, the monthly returns for March have been flat on average. The past 3 years have been quite bullish. I've already said this time is different, a bunch of different ways, but I do think we kind of have to throw out the historical data. It's different, right? We have billions flowing in, okay? Look, in 2025, you can laugh at me if we're down to 20K, but I just don't think that's going to be the case. ETH monthly average here, March, certainly much stronger than Bitcoin historically. We'll see if that keeps up. I'll comment on the ETH ETF speculation in a second. But with anything over the long term, if you're here, you need some sort of model. You need something. whether it's Rainbow Chart, Power Law, S2F. I'm not a fan of S2F, okay? But you need something guiding you beyond what's going to happen tomorrow or in the next 8 hours or in the next hour. I really like the Power Law chart, not just because it's bullish, but because it has made sense to me. To some people, it's not going to make sense. That's fine. This is a zoomed in version. Pick a date, pick a time. Year after halving. Let's go to a year after halving. April 2025 has us over 400K. If we get between here and 400 between now and a year from halving, I think most people would be pretty happy with that. We can dig a little deeper. So I stole Fred Krueger's data on his hyper Bitcoinization. And if you want like a spreadsheet with time points and years, this is just yearly data. So we're currently in this series. Anything above 132, 265, 530, right, would be the Power Law multiple, basically, to create those channels. Using something like this, you can also say, should I be buying here long term? Should I be selling here? I think anything above 265, yeah, I think that's appropriate to probably start slowly dripping some out. There are people panicking right now about not being in or selling or whatever. Okay, but you need some longer term grounding using data, right? Okay. Again, pick your favorite model. Pick one. I don't care what it is. And think about that. And think about how much you want a year from now, 2 years from now, where you're going to be selling, where you're going to be buying. Make a plan. Everybody's different, but you need a plan. 2-year moving average multiplier is another one historically that has acted as you'd want it to act. Where are we overbought? Where are we oversold? We are approaching the midpoint. This is log, so it's going to look a little strange, but we are approaching the midpoint with the moving averages curling up. Currently, we're topping out at 140. So this says if we hit 140 tomorrow, then maybe you should consider taking some off the gas. Okay. Power Law corridor, a little different version of what I've previously shown already. And look, you don't have to love it. You don't have to marry it. You can say it's broke this way, that way, the other way. I don't care. You need something. But again, this tells me we are more in the first half of where we could be in the first quarter, opposed to being near the end of this cycle. Let's say you throw all that out. Okay, fine. What do we do past all-time highs? Well, that's easy. Most of TA is very easy. Trading, it's hard. Pattern recognition is easy. Trading is the hard part. Okay. So we take the high, we take the low, gives you a target. I did the same thing with every single chart pattern on the way up and way down. That's never going to change. Use the wicks, use the candle bodies, use this wick, use this wick. I don't care. Use whatever you want, but you need something that says, okay, in the midterm, where do I think I'm going to go? Well, fib extensions measure from 102 to 122. This was set in stone the moment we put in the low. 50% retracement was set in stone. The 618, the 786, the 886, whatever fib of the week people are talking about, all that stuff was set in stone, and we're just walking up the ladder, just as the 1618 or the 1276 or whatever else someone's going to bring up next, okay? For 2024, I think this is a viable target. Now, depending on whether or not we continue our parabolic advance here and find some resistance at like 80, pull back to 50, okay, I think that's what people are sort of waiting for. The bears are going to claim that they are victorious. Congrats, you've missed everything probably from 20K to 80K. The people on the sideline are going to say, I want deeper, and they're going to refuse to acknowledge that that's a great time to buy. This is just a potential scenario, right? But again, you have to plan this out in your mind. If this, then that. If this, then that. If you're not happy with your current positioning. Looking at the monthly cloud, monthly RSI, monthly cloud is exactly where you want it to be in the beginning of a trend. If anything, last month closed with the bullish TK cross and price above the cloud, bullish cloud. Even the lagging span, okay, has joined the party, okay? So there are no reasons to be bearish at all here. There's just none. You could say, well, this could be a cup and handle. This could be an inverted head and shoulders. Sure, fine. Bring it down, bring it back down to 40 to 50. I don't care. I know where this is going, and it's going much higher. Looking at RSI, many have pointed out, once RSI on the monthly closes above 70, we tend to have quite a run. Do we have crazy intra-month movements from time to time? Sure. But again, it's hard to look at that and say, well, I don't know, doesn't look bullish here. It's overbought, right? Like, okay, that's fine. I'm not going to tell you how to trade your book, but that's not what I'm seeing. Weekly cloud is officially, flipped bullish once again. Bullish Kumo twist. So we've successfully completed that edge to edge on the weekly, and in a rare feat, pre-halving, have kept going. Okay. This is why you can never stick to one narrative. You always have to trade the chart in front of you. You cannot say the cycle was XYZ. Okay. So that has to happen. Or there's this macro data point, and last cycle it was this macro data point, and that has to happen. That is the worst possible trap. If the data changes, the analysis has to change, the trading has to change. You cannot just say, oh, we should have pulled back at the 786 or whatever fib. Okay. We tried, we didn't, we kept going. There's plenty of evidence for that. There's plenty of fundamental and flow evidence for that. We continue to look good, continue to look like we could go higher. Does this look like an absurd chart? Absolutely. Have you seen the S&P though? It's up 16 over the last 18 weeks. You want an absurd chart? There's an absurd chart for you. You want an absurd chart? Let's talk about the US debt. Okay, 34 trillion. That's an absurd chart. So there's absurdities all over the place. This is just one of them, right? As far as distance from the 20-week moving average, we actually slowed down a little bit relative to last week, which was the largest notional value candle ever. But we are now 44% above the 20-week. I would certainly prefer if we slowed down. I have a chart in a second. We've clearly sped up, right? The consolidation periods are slowing down, and we're trying to push. Eventually, yes, we will hit a tipping point where funding is literally infinity, and it'll come collapsing down like a house of cards. I don't think we're quite there yet. If I'm looking for a longer term support, it would be the 20-week, but I caution you that this may not be good enough, just as it wasn't good enough in 2019, and it certainly wasn't good enough in 2020. And what I mean by good enough is if you are waiting, how long are you going to wait? When do you say I'm going to be wrong? Maybe you pop on the 10-week moving average as a support as well. You know, in 2016, 2017, we had a much different market that wasn't as established, a little bit more loosey-goosey, okay? Times have changed. So to say, yes, we have to hit the 20-week, I'm not so sure. We certainly didn't last cycle. I'm not saying we can't. I'm just saying don't assume we will and then miss out on the whole thing, right? Daily Cloud looks excellent still. You could say, again, we're overbought. Yeah, I get it. That's fine. I'm not going to deny it. We're overbought. RSI is quite high. No bear div quite yet. What I was saying on Twitter today is that we had quite the move pre-ETF. The whole thing was a bear div. All the way up. Never hit the Kijun on the daily. So I'm not advocating for a similar percentage move. I'm just saying, look, we can keep going on bear divs. Doesn't matter. And we don't even have the bear div on the daily yet. We just have one starting to form. So until I see evidence for failure on the daily, I don't even know what I'd be looking for at this point, because we just have moved straight up, right? We've not given the market a chance to draw anything bearish just yet on high time frames. Next yearly pivot is at 81.2, and we could easily get there on a bear div on the daily. Nothing says we can't. To the downside, I like 50, I like 51, 52. You know, let's say for whatever reason we decide to sell off significantly, that's where I'd be looking to get back in for sure. Just simply using fibs again, take the high, take the low, call this a flag, call this a pennant, consolidation, call it whatever you want. That also measures, you know, all this stuff gives you a potential roadmap that if you're trading from consolidation to consolidation, or you're looking for prices to exit a leveraged position, here you go, right? So in lower time frames, I like a move between 72 and 77. I think 82 is a bit much on, next week, right? That would be a serious weekly candle. But just as an idea, that's something to watch for, because we continue to speed up on our consolidation. You can say this was a base or whatever, but I don't care. Sort of topped out a little bit as we get closer to the ETFs after the ETFs launch. And then it's just been boom, 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 boom. Very slow consolidation relative to where we were in 2023, right? I think some people also still have PTSD from the bear market and just can't believe we are where we are. But as this speeds up, as any chart speeds up, you tend to reach some crazy euphoric level. So look, if Coinbase goes down again at 82 or something, then yeah, maybe the top's in for a minute. Okay. But we'll see what happens when we get there. Looking at Bitcoin funding, eventually this stuff starts to matter more, right? The higher we go, the faster price needs to move up to prevent people from closing their positions, or they just need to have significant confidence that we're going higher. Now, you could argue most of this is retail, most of this is unsophisticated traders who don't care about funding as much. Maybe, but eventually it'll certainly matter. Post halving in 2021 into 22, funding was quite high for most of that, right? Funding can always go higher. I don't know. Are we that bullish? Flows would say we are. Flows would say we could support this based on rates for the US dollar. You could argue funding should be much higher. Just the cost of capital is higher. To get dollars into the ecosystem is higher. They're competing with money markets, right? It's a different sort of market relative to ZERP. We didn't have an interest rate. We do. So just another part of the puzzle. I'm not one of these people who says, funding is X, OI is X. We can't keep going. It's just probabilities, right? The probability that we need to keep going more increases the more funding increases. That's it. That's my read. Flipping to ETH. ETH looks okay. Everything looks okay, but you have to measure it relative to BTC. If it's not gaining on BTC, what's the point? BTC is the index effectively to everything. It is the market that matters. I know there's alt people who don't care about BTC. There's ETH people who don't care about anything else. Most of this is falling on deaf ears. That's fine. But from a relative value perspective, you're losing out considerably. The good news is for ETH that this pitchfork looks very much live. Again, you need some longer term something. You're not going to get that from the cloud. The cloud's going to tell you what the trend looks like if it's overbought or oversold. It's not going to give you longer term targets. That's why I like 10K in 2025. Sure. 5K by July. Something like that, right? Now, I wouldn't trade leverage on this, but just as a broad stroke, I think it's pretty good. It's done pretty well. I like that it's multi-year. So far so good on the ETH front there. ETH Daily Cloud, again, we're overbought in a sense that we are pretty far away from the TK lines. You can say there's ETH ETF hopium approval, blah, 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 I guess. I don't know. Wealth effect, spilling over relative value, etc., etc. The next move higher would be 4K on price. This doesn't exactly look normal, but ETH is playing catch up to the rest of the market, playing catch up to a lot of alts, and many things are still outperforming ETH. So as silly as this looks, I don't think it's unreasonable based on where the market is at the moment. The right-angled ascending broadening wedge, I just bring this up because it's important to take that snapshot in your head next time this pops up and you're thinking, nah, we can't hit that target, or this diagonal's a mess, or what is this mangled stuff at the breakout, right? It happened, okay? Like, doesn't matter that I think it's silly. It happened. Okay, that's a data point for later, right? Historical reference. You were there, congratulations, when the right-angled ascending broadening wedge played out exactly how it should have. The target here would suggest we start to slow down between 33 and 36, but if Bitcoin pushes to all-time highs and beyond, everything is sort of off the table and gets squirrely, right? Who knows? Who knows where prices go after that? But they probably continue to try to catch up. From a relative value perspective, ETH, I would argue, has done poorly. It is down over 30% since the merge on ETH BTC. There's a technical pattern, a diamond bottom, potentially, where this could play out. I've seen diamond bottoms fail plenty. There's been a failed diamond bottom on ETH BTC in like 2016 or something, okay? So this can fail. The good news for ETH is it's got ETH hopium as ETH ETF as a hopium tailwind to help push this higher. The question is, what's the risk reward? When is it an appropriate trade? I think we're getting closer, right? You could draw a diag maybe here and say over the next couple of weeks, if we start to see consistent higher highs on ETH BTC, maybe it becomes a trade. But you have to be really careful because ETH ain't getting 1.7 billion a week right now in flows, and I would argue probably not even when the ETFs are live. So I still don't think the risk reward is quite there for ETH BTC. One other thing you could do, go to the 3-day cloud for ETH BTC and see whether or not we actually make it through this cloud. It looks like we want to try, but I don't know if we will, right? So that would be a trade to watch into probably April It's just very hard to trade ETH BTC directly because, as you can see, it is very, very messy. ETH does have 4484 or whatever scaling initiative coming. I don't really know anything about that, but supposedly it's going to lower fees. We'll see. I don't know if that is necessarily going to matter. It seems like the horse has left the barn for retail. They're trading on Solana, or they're using layer 2s, or they're doing anything else that isn't ETH. The good news for ETH is that the Sol ETH chart continues to look bearish, even though it had a nice little bounce. It's still in the cloud. This remains neutral until it's above the cloud, but over the next couple of days, this should flip increasingly bearish. The good news that from a trading perspective is, as this flips from bullish to neutral to bearish, if it flips bullish once again, right, then you get this other opportunity similar to August, September, October to flip from ETH to Solana. So I would rather just keep neutral, keep making that decision. No big deal. It makes this trading signal coming up much cleaner. Sol BTC, same thing. There's no real winner here. Over the past 2 months, it's curled down, but it has tried to keep up. So if you're one of these people trading in between alts, certainly a chart I would watch. On the USD pair, the cup and handle that we had been watching played out. You got your Kijun bounce, you got your TK recross, all that looks good and fine. This maybe would measure to a flag pennant situation on lower time frames. I still think 140, 150 is the logical target. I just don't think at this point anybody trading Solana from December to February cares about Solana anymore. You know, they're trading Pepe and SHIB and Floki and WIF and a million other things that aren't solely USD. So that may make moving this chart higher a little bit more difficult relative to Bitcoin, relative to ETH. I mean, there are so many charts. Okay, there's like 50 charts. TVL has perked up a little bit, right, since Q4. A lot of this is probably just price appreciation of the underlying, but that's always a good sign to see TVL rising. Last time TVL was this high was going into mid 2021, before Luna exploded. Funding, as I said, is incredibly hot. Many people have noticed that. I don't think it's prevented anybody from taking any trades, but many people have noticed that. Funding, in fact, so hot that these funding trackers have had to add a new color to denote how hot these funding periods are. So as long as you're aware, right, you can always, if you're trading alts on leverage, you can always take profit, roll that profit plus the collateral into spot, right? Or sell half on a double, roll that into spot, right? That shields you from crazy downside. It shields you from eating funding. It shields you from a lot of stuff if you're worried about funding. There's something to consider to take a little bit of risk off the table. Back to Uni. So Uni, obviously through the weekly cloud, quite handedly on the governance proposal, which looks like by all accounts it's going to pass on the snapshot sentiment poll at least. But the question I get a lot from people lately is, okay, like this one's moved, what next, right? Well, again, there's about 50 different versions of this. If we go Doge, same thing, right? I think I said on a stream or a video that we're going to wake up and Doge is going to be at 13 cents. Somebody said, no, that can't happen. The market cap, blah, 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 right? Well, here we are. We're at 16 cents. Filecoin, and I know a lot of people in this trade doing quite well. It doesn't really matter what the coin is, right? Because again, we can just go and look. ALGO looks great. NEAR looks great. FTM, sure, why not? BAT, right? We're talking like stuff that shouldn't exist and should have died years ago, right? All of this could move up. Will they all move through the cloud? Probably not. Tezos, okay? Tezos is moving through the cloud. EOS is moving through the cloud. ETC is moving through the cloud, okay? It's hard to be wrong here, which is typically a sign that we're getting closer to the end. I don't think we're quite to the end, but I think we're getting close. EOS coming off a inverted head and shoulders there. Flow, Mana, all this stuff is the same. It will trade the same. At least it will try to trade the same. We'll see how long this party lasts, but it's hard to find a chart that doesn't look like this. If you're trading something that doesn't look like this, why, right? I guess you could argue something like Stacks, Render, INJ, something that's already at all-time highs. Sure. Trade that. Love it. Fine. Keep going. but there are plenty of charts that look just like this. One thing, back to funding again, if we look at total 2 relative to stablecoin prints, they tend to move hand in hand. I mean, it's the liquidity gauge effectively for altcoins is stablecoin prints. We don't have altcoin ETFs, right? The difference between 2021 and now isn't necessarily stablecoins in circulation, but it is rates. It is DeFi rates. It is funding, right? We're seeing what funding looks like in a non-ZERP environment. That isn't to justify like saying, oh, this isn't as bearish as it looks. I'm just saying, it's a little different than 2021. Just something to consider. Let me just wrap this up with quick legacy stuff. DXY held flat, continues to hold flat. Kind of a failed breakout so far with this inverted head and shoulders. Absolutely love it. Let this thing range forever. Let it drip lower. Crypto loves it. Everybody loves it. Emerging markets love it. Adds to the tailwind for crypto. There's been a lot of chatter about oil, which unfortunately is making a move through the weekly cloud. And 96 would be the edge to edge here, which I think we can all hope doesn't actually play out. You don't have a bullish TK cross on this. The other argument would be some sort of mega head and shoulders, even a head and shoulders here. You certainly wouldn't want anything above probably 85 if you are bullish the world, okay? Higher energy, higher inflation, risk markets lower. That's generally my read. So just something to pay attention to in the periphery. If we start to tick off all these things, right? Unemployment at the end of the week, if that's up. If oil's up, if we start to get a bear div at 75 on BTC, if S&P starts to break down on this bear div, which is now going on like 3 months long, right? 3-month bear div with a rising wedge through a pivot at this point, which is impressive. The cloud here actually looks more reasonable than the cloud on Bitcoin. It's just kind of hugged price. Price has hugged the Tenkan. There's no real risk yet that this is going to roll over, but again, something to watch, to pay attention to throughout the week. There's a Coinbase setup. Coinbase, I think, currently is at around 210 in after hours trading, pre-market trading, however you want to think about that. So this chart has broken out. TrendSpider, by the way, a must follow just because look at this chart. Look at how clean this is, right? He does great technical analysis. And lastly, if you're looking at, BITX or miners, I'll talk about miners and stuff more on the macro vid. But it's interesting that since the inception of BITX mid last year, it's actually underperformed. That's the 2x ETF, by the way. It's underperformed coin just a little bit. It's certainly underperformed on MSTR and definitely underperformed CleanSpark in the long term. We'll see what this looks like. It doesn't exactly track 2x BTC because of futures, because of fees. But if you're a legacy person and you have broker money and you're looking for something that's got leverage, this is an option. It's not a promotion. It's just something I trade with. So all in all, if the flows keep flowing, we remain pretty bullish. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.